Hey there, everyone. This is Trader Tim from eMiniMind.com doing a Monday market analysis video to kick things off for the week. Well, last week we ended with some really good earnings from the tech space, and that has sent the markets back into new high territory. We'll start off with Amazon. Amazon being probably the biggest jump. We saw the same thing in Google, although Google has pulled back a little bit, forming that inverted hammer. The interesting thing about Amazon, you have this long sideways consolidation, kind of in this window below really 900 to 1,000, and just moving sideways within that range. And it wasn't until just the earnings announcements that we were finally able to break out of not only that range, but into new highs above 1,000 for really, um, a sustainable move. But this could potentially be a sustainable move above 1,000, as opposed to breaching and then pulling back and then breaching and pulling back. So the fact that a lot of the tech stocks saw similar jumps in their earnings, off of their earnings, is a good sign. Netflix has been staying steady. Another one that I also like, even though they didn't have a huge earnings jump. And then Apple as well, moving back up into those high territories and actually approaching its earnings, unlike the other two that already announced. Microsoft having another earnings jump. So, if we come back over to the NASDAQ, we can see that reflected in the broader market and on good volume as well. So S&P looking pretty strong, as we've had a little bit of a pullback last week. Kind of made that V reversal on Wednesday it was, and then now approaching new highs once again, breaking into new highs on Friday, and then today being a little inside day. If we take a look at the E-mini S&P, I wanted to look at a couple of trade setups from today, as well as the daily setup that we're holding. Last week, we ended up going into an extension of highs to highs, and that's what pulled back, stopping right at that 25.42. That target is a 25.93. So from a daily context, even if we move a little bit sideways here, again at that negative 61.8, which is the larger fib retracement from down below us, even if we move a little bit sideways towards this trend line that I've had drawn up for a while, it's likely that we'll drift towards this 2600 level on the S&P E-minis. We're getting into that point where we've got some holiday momentum coming with these earnings announcements, with the actual holidays approaching. We should, there's a strong possibility that we can just continue riding that momentum and keep making these new highs. So today, this morning, Monday, we started off with a nice little low to high that pulled back right after that 15-minute mark and moved sideways for a little bit, about 30 minutes really, and then got that breakout that kind of started the day's flow, if you will. So that 50% retracement traded up to its target. And then the next one, now, one thing I talked about last week is sometimes you get into situations where you have a couple different lows. And if I get a good shot here, it really doesn't matter in this case, both of them. If you took the low at the 50% original entry to highs, that traded nicely to the tick. If you went up a little further to highs, same thing, got you in about a tick ahead. So it really doesn't matter. They're so close, the actual 50s. So if you're unsure, you can kind of split the difference or go with a little bit closer one that's closer to the pullback itself, so that you don't miss it, just in case it doesn't make it all the way to that full halfway back. So that setup took us to its target once again, and then the next setup had a little bit of a bounce before failing the 61.8. So it was a nice 1-2 punch. The third one sold off, stopped out, and then you can just start in the other direction. So when we're in a series of longs like that, it's important that you don't just, take the stop out and then go grab lunch. You want to look for, the first setup in the opposite direction, which would now be the short. So just starting from highs to lows. Now, depending on if you were trailing your stop and you're in the trade and you're taken out, you might have been able to get in up at 76.25s. If you entered a new long trade, your 6-tick stop may have been a little bit lower, but either way, whichever anchor point you're grabbing, so the 61.8's broken, we'll want to start with the highest point as our first anchor. And then whichever one you grab as the low, whether it's this, the second one, we'll call this the first one, the second one, or the third one, they all work out and they all kind of start that momentum to the downside. And so then, as I like to do, trailing my stop above the swing highs on the way down, this ended up being a really nice short setup. Solid 10 points to the downside, 76s down to 66s at the lows, 67s rather at the lows. So it's not as crucial to necessarily have to pick the perfect entry, as it's more important to be able to stick with the trade, not get scared that the trade is gone 3 ticks in your favor and you want to just get out because you're afraid that it's going to turn around and go against you. Trailing your stop is a very good way to overcome that fear of, should I get out at some arbitrary target? Should I just put my target at 2 points and then get out and so I'm not greedy? Well, if you trail your stop, and just by trailing above the swing highs, in this case because it's a short on the way down, you can let the market tell you when to get out, eventually getting out down here at this swing high at 69s. So that's a really good way to develop some good habits and some good trading, very key elements of your trading. It's, like I said, not quite as important on the entry itself. If it's a couple ticks off, it's not going to make a huge difference. But if you're getting out for only a point instead of 5, 6, 7 points on these bigger trades, well, that's really going to skew your data set and your statistics when it comes to your P&L. So that's a little trick that has helped me over the years. If you're trading one contract, just setting your target at the -23, entering at the 50, exit at the -23, move on to the next one. If it goes 5 points past your target, getting out the -23 and moving on to the next trade with one contract is really all you can do. If you've got 2 contracts, now you can exit one at the -23 and trail the second. And now you really get into some, I wouldn't call them overly advanced trading methods, but some more sophisticated, sustainable in the long run in terms of, now you're at 2 contracts, well then you can go to 4, then you go to 8, and now you can really be managing the position as opposed to just sort of sitting back and letting it ride up to your target. So a good week looks like in store. This is a little bit bigger body candle, 17.5 points. So, watch out for that inside day. Usually it's only 2 or 3 days inside before it breaks if we're going to, get a little bull flag, as we have seen a lot lately. We'll be doing a live trading session tomorrow morning, so you can join in and follow along with me as I trade. That is over at emoneymind.com/VIP. Thanks, everyone. We'll talk to you tomorrow.